question is, you're positive in terms of consumption.
Consumption, yeah.
Correct? This is a counterplay when it comes to consumption, then why?
The market cap compared to their current EBITDA and current PAT levels is just too high. So they have to grow at very heavy, I would say 50-60% for next 10 years to justify current market caps. That is the problem. In FMCG companies, yeah, they are well-established business models. They are making 2,000 crore, 5,000 crore kind of PAT. ITC actually makes 20,000 crore PAT. They give you dividend. There is a dividend yield. Here you have to just hope for growth. And if that growth is faltered due to some disruption by some other player or some, and you know, remember, I always say that why Bharti did so well over last so many years? Because the other players were bleeding, right? Here, everybody is getting free money from stock market. So stock market investors are funding them.
Yeah.
Right. So everybody has money, cash to earn money. That is why it doesn't. This space doesn't excite me.
All right, and you've already spoken about the spaces that do excite you. Parag Bhai Kush, as always, saying thanks so much for taking the time. Pleasure speaking with you as always. You know, it's quite a critical day for the Tata Group and Tata Sons in particular, because there's a board meeting that's taking place today, and reports are suggesting that the Tata Sons board may take up the matter of the extension of Chairman N. Chandra. He has walked in, and we have those live visuals that came through just a short while back. There you see, this is the headquarters, of course, in South Bombay of the Tata Group and Tata Sons in particular. N. Chandra walking in, and we've got Nisha standing by just outside Bombay House, and we'll come to her in just a tad bit to get you a sense of what is expected to come through later today. But this is certainly a story that we will be tracking through the day. For now, let's turn to Blue Jet Healthcare, and it has begun expansion work at its Rambili facility in Visakhapatnam. This is a major step in its next phase of capacity addition, and we've got the management, VK Singh, joining in just a bit. But before we do that, let's bring in Varsha to give us some context. The stock is up about 4.3% right now. Varsha, significant development for them.
Well, yes, absolutely. So the new land acquisition in Vizag will actually scale up their operation and capacity, and of course infrastructure, which will also help in these, in their contrast media segment as well. Now, this facility will strengthen operation and supply chain. Onto the CDMO pipeline for the company, there are 20 active RFPs, and 2 commercial products will need dedicated capacity, and Vizag capacity is also planned to support these opportunities. Onto the pharma intermediates, the recovery over there is expected in next 1 to 2 quarters, and the end market remains healthy according to the company. Onto the contrast media, backward integration at Mahat could be a game or major driver for this segment, while the realizations on this product should be higher than the main molecule. Onto the Hyderabad R&D, the work is expected to start in Q3 FY27. Focus areas are GLP-1 intermediates, peptide chemistry, and biocatalysts. So overall, a lot of things are actually working when it comes to Blue Jet, considering the capacity expansions and the growth expected in contrast media and PI going forward.
Okay, all right. Thanks so much, Varsha, for getting us those details. Like I said, we've got Mr. VK Singh, who's a COO of Blue Jet Healthcare, joining us this morning. Mr. Singh, as always, absolute pleasure having you on the program. Pleasure speaking with you. Let's talk about this expansion. When do you see the commercialization take place? What are the implications on earnings?
Thank you, Alex. Thank you very much for having me on your show. It's always a pleasure to be on your show. Alex, if I just step back, I would say that 3 years back, the company inflected. Today, you're aware, and we are witnessing, being a part of the industry, that there are tailwinds for India. And the pharmaceutical sector, particularly the API sector, should see some tailwinds, and there are opportunities coming our way. Now, the way we envision the next 10 years for the company, we believe that there are two very critical or essential pivots on which we will be able to blitzscale the business that we have today. One clearly is R&D, and your colleague spoke about the new R&D center that we are building in Hyderabad. We will be doubling our R&D capacity with that new center, and we'll be creating some new platforms over there in the R&D center. The second big pivot for a CDMO company like ours will be the capacity. Now, Vizag is addressing this second pivot, that is capacity. And today, as we speak, there's some work happening over there, and on February 28th, we are doing groundbreaking, which is in a few days from now. And I think, Vizag, that way Andhra Pradesh, given the current political dispensation, is giving us a very expedited approval almost everywhere. It's a very well-developed pharmaceutical ecosystem. The ecosystem for setting up manufacturing capacities is quite compliance ready, a single window. So I would imagine that from groundbreaking to getting the facility to an operational level, we will take anywhere between 2 to 2.5 years.
2.5 years. All right. What specific milestones are you anticipating or product validations that are between the end of FY27 and FY28 therefore? Because one would assume with this new plant coming through during that time frame, this gets important, doesn't it?
Absolutely. You are spot on. Alex, in the healthcare pharmaceutical segment today, our asset turns are close to 4. Now, this is one of the highest in the industry. While we do admit and we acknowledge that it will not be able to maintain these, but the whole model, the way we try and conceive the business is that our asset turns should be high. One of the ways in which we accomplish is that we try to ensure that the gestation after the facility is production ready or validation ready should not be too high. For that, how do we accomplish that? We accomplish that by, ensuring that the capacities are tailing requirement. And, there is already a client lock-in. So to a very specific answer to your question is that the moment, the common infrastructure is created and the production blocks are created, I think there are certain products that we are already supplying today from our existing capacity, which some volumes will migrate to the new capacity. And given the fact that there are certain, there are a lot of lateral entry opportunities. So we are also tracking to very credible, high conviction lateral entry opportunities, which will kick in very fast because the products are not in any clinical phase, they're commercial.
Yeah.
So the ramp up of production will happen much faster.
Yeah. Mr. Singh, couple of very quick questions. To what extent is the phase 1 capacity already pre-booked or backed by long-term supply contracts, and what are the funding needs that you might have at this moment?
So, Alex, we are in phase 1.
Yeah.
At this point of time, it's a 102-acre plot, so it's a very large site that we have. And today, the board approval that we have is for doing a 1,000 crore capex for only phase 1, where we'll put up about 1,000 KL of capacity. This capacity is going to be distributed on 4 production blocks. 2 production blocks will be dedicated to contrast media, one for the API segment and one for the high intensity sweetener. Now, for the contrast media blocks, we have pretty much a client lock-in. So I would say that the capacity utilization here would be pretty high. For the sweetener block, the high intensity sweetener block, we already have an anchor client, but then the capacity will not be fully utilized. I would say that, when we commence production in about 1 or 2 years of commencement of production, we would be at 40 to 50% capacity utilization. And for the API block, which is a lateral entry case, there again, just like contrast media, the capacity utilization will go to, let's say 80% or whatever, very quickly.
Okay. Mr. Singh, as always, an absolute pleasure having you on the program. Wish you all the best and look forward to speaking to you after the 4th quarter numbers as well, because we'll have lots to parse and lots to talk about even after that.
We wish to invite you to the groundbreaking at Vizag, so we should speak then.
Absolutely, absolutely. We'll talk soon. Thank you so much, Mr. Singh.
Thank you.
All right, Olectra Greentech has won a large electric bus order from Telangana State Road Transport Corporation, and the contract covers supply, operation and maintenance of over 1,000 buses under the gross cost contract model. We spoke with Mahesh Babu, the managing director of the company, about the prospects and what this specific order means. Listen in.
Let me start off with the big order win, almost 1,085 buses, 1,800 crore order win talk to us a little bit about this particular contract, because we have seen that you have been bidding and also being L1 in a lot of buses. So this clearly is a big order win for you. What is the timeline of delivery that is expected for this buses of 1085? And specifically, is it in phases that you will start the delivery of this particular order?
Hi, good morning. Firstly, thank you very much, and we are very proud that we played and participated in the CESL tender of 10,900 PME drive tender. I'm happy to announce we got our first LOI from Telangana for 1,085 buses. These buses are low-floor buses to be run on the cities, to be run for 12 years. This includes supply and maintenance and operations of these buses. We will do the operations through our associate company, EV Trans. So Olectra is very happy that we are able to get this order. And it's a very significant achievement for us because this is Make in India vehicles. It has to meet PME drive. And we have been investing on technology for last 10 years. And we are very happy that we'll be able to supply them over a period of 20 months as per the tender. So initially, we will do the prototype within the period as specified in the tender, and the supplies will start within 6 months, and we will complete the delivery within 20 months as per the tender. We have won about 1785 buses as part of this 10,900, and we are very specific that we will select tenders which are profitable and sustainable for both STUs, the OEMs and the operators. And by and large, we are very happy that we got the first LOI, and now the actions are being started to complete the tender agreements and then start supplying of these buses.
Mr. Subramanian, that was actually my second question as well. So you had mentioned that roughly out of the 10,900 buses, you saw a couple of smaller companies bid aggressively on that pipeline. So from that 1785 buses, this order 1085 buses is what you got from that 1785. Any timeline for the rest of them? Is it like you're waiting for the tender to finally open, but you are confident of winning those tenders, or you've already won it and just expectation of the announcement to come very soon?
This 10,900 buses of PM E-Drive has already been opened. So we have won about 1785, out of which 1,085 is with Telangana, for which we got the LOI. And about 700 buses is for the Bangalore city in Karnataka. So we are working with the Bangalore BMTC officials to move ahead in LOI. So that process is going on. While we do that, we will now focus on what LOA we have got on 1,085 buses. This includes about 60 air-conditioned buses and remaining non-air-conditioned buses. So we'll supply the first batch to Telangana in Hyderabad. If you look at it, already there is one more tender from PM E-Drive, already close to 6,000 plus vehicles. We are already looking at participating in those tenders as well. But we are very selective, and we will be very conscious of the fact that we'll have to grow profitably, and hence we will not be aggressive in terms of numbers, because we believe that if we have to take the electric mobility for a longer period, then all the ecosystem has to be at least sustainability, maintaining profitability. It has to be win-win for state transport undertaking. It should be a very what I would say, reasonable numbers in terms of what we are quoting and making profit, and all the stakeholders in the system. So I believe that if electric vehicle has to go to 10,000 plus per market, which I believe will happen in next couple of years, that the ecosystem has to be very, very robust in terms of reliability, durability, and also profitability. So we are very clear that what we are doing, and we have enough tenders in hand, and we will make sure that what we commit, we deliver.
The other aspect also, Mr. Subramanian, has been on delivery schedule. Now you mentioned 20 months for this particular order, and you mentioned about the timeline also for the next 6 months. But just in terms of capacity, I think the last time we spoke, you mentioned that you are looking to increase capacity from 1,200 to 2,500 buses on a per annual basis by the end of December. Firstly, has that already happened, and is that just one shift or two shifts? If you can also clarify to us.
Yeah, as we see in the last quarter, we have declared that the phase one of operations in our manufacturing facility has already commenced. Now the capacity is about 2,500 per shift on an annual basis. Now, if you want to increase, we are happy to go to double shift and make close to 5,000 vehicles. So that's very much possible. So we are already commenced those operations. So manufacturing facility is ready for us to deliver for next couple of years. And all these tenders, what we are winning, we have enough manufacturing capacity and we can even participate in the future tenders as well.
All right, so that's the management of Olectra Green speaking to your channel NDTV Profit. Of course, just a short while back, you saw exclusive footage of N. Chandra stepping into Bombay House. That's the headquarters of Tata Sons in South Bombay. And today is a crucial day because it is a meeting of the board of Tata Sons. And reports are suggesting, in fact, exclusive updates are suggesting that one of the factors that could be on the agenda to discuss is the extension for Chairman N. Chandrasekaran for a third term for a period of 5 years starting 2027. Nisha Poddar is joining in to tell you why this is so important. Nisha, over to you.
Thank you so much. Yes, I got the opportunity to greet the chairman of Tata Sons while he was entering on this crucial day. It's going to be a big day because reports do suggest that Tata Sons board may be taking up his extension and Chandra's renewal for the next term, which starts in the year 2027. But while we are in 2026, remember that his term really ends in 1 year, and this is the right time in which the rules do allow Tata Sons board to take up this particular aspect. We do know that Tata Trust has already passed a resolution for N. Chandra's, renewal for the next term. Now, as part of this crucial meeting, Tata Sons board will also be meeting some of the leaders of various groups, the futuristic sectors in which Tata Sons is really making strides. So we are talking about technology in which K. Krithivasan, the CEO of TCS, is going to make a presentation in front of the board of Tata Sons. Also present will be Randhir Thakur, who is the CEO of Tata Electronics, who will be giving a presentation to the board on the semiconductor business and the progress on their project as well. So these two are going to be also critical, but the crucial decision of Tata Sons board really approving the next term starting 2027 for N. Chandra is a crucial one for business continuity. Remember, Tata Group on the whole is in the middle of a capex cycle where electric vehicle as well as renewable energy, semiconductor and AI thrust to TCS. These are all critical areas which are all under work, and that is something that N. Chandra has started. So a business continuity and a leadership continuity from the standpoint of the listed entities will be very, very crucial to watch out for as a large corporate development in the board meeting today.
That's going to be a large corporate development that we're watching out for. Thank you, Nisha, for getting us the details. We will keep coming back to you to get some updates that could be coming in from Bombay House in South Mumbai, with the key agenda being, extension in terms of tenure of Chandrasekaran as well. But, it's going to be interesting to see how the Tata Group companies have actually performed and, marked as one of the most transformative periods in the conglomerate's history during his tenure, from driving the One Tata's strategy to reshaping the portfolio with bold acquisitions in aviation, retail, even semiconductors. Chandra has actually steered the group into a new era of growth. Sharad joins us with the details on the power era of N. Chandra and the challenges ahead. Sharad, what do you have for us? Because it's going to be interesting to see how the companies have actually scaled and performed.
Exactly, and just let's map out his journey with Tata Group. He joined Tata Group as an intern in 1987. Look at that long association. And he was the CEO of TCS from 2009 to 2017 and was appointed the chairman of Tata Sons in the year 2017 February, and now we can see almost 6 years is being completed. They have implemented a One Tata strategy across the conglomerate And if you look at the key achievements which have come under N. Chandra, this includes the first thing is the group market cap that has surged past the $365 billion mark, successfully acquired and integrated Air India into the aviation portfolio, launched Tata Neu, which is a super app from Tata House, and they have integrated the semiconductor manufacturing and the battery cell gigafactories as well. So present, past and future, he has been integral part of Tata Group. But let's look at the stocks during his tenure, right from when he held the helm at Tata Sons, the top gainers which have been, and this is the addition to the market cap. Trent has been a big multi-bag of 1,536% returns coming under his tenure. Titan, Tata Consumer, all of them becoming multi-baggers. Let's look at the underperforming stock. There are some stocks which have seen a downtake also. Tata Tech, the recent listing, that's down 54%. Tata Chemicals, not so much, just up 22%. And Tejas Networks, just a decent set of numbers coming in. So only one recent listing is there. That's where the downtick is coming. Otherwise, the slate is actually very clean. There are some strategic expansions also under N. Chandrasekaran. They've acquired Bhushan Steel to fortify their domestic business going ahead, bought Big Basket, they consolidated the aviation business, especially if you look at Air Asia, Vistara and Air India, and also commenced the semiconductor fabrication plant which is located in Gujarat. But there are some challenges also which the group is facing. The first one is the TCS revenue growth down due to the Western macro headwinds, or you could say AI issues, emerging digital and clean energy investments which are there, but they require much more scale and investments. Overall group market capitalization recently had a $73 billion correction, and leadership succession planning alongside impending executive board term limits. That's also a key question to be asked for. But this is the entire journey of N. Chandra and his important contributions coming in for the Tata Group.
Okay, Sharad, thanks so much for that, and very interesting metrics certainly to track over the course of the day. By the way, we have been speaking about the impact of artificial intelligence on IT, and in fact, we've got an exclusive chat that is ongoing. Neeraj is speaking currently with Vishal Sikka, the founder and chief executive officer of Vianai Systems. Listen into a portion of that conversation.
One side of the reality, and therefore you see the impact to services, you see the impact to several kinds of software like workflow software, or today there is this thing around COBOL migration or cyber security, or even things like what you do for developer productivity around various kinds of mundane tasks that used to happen in software tools. Those are more and more showing up inside the AI, inside the LLMs. And therefore, again, the productivity of one person or two people doing something with that AI far exceeds now what was possible to do before by one or two people. And they might end up replacing the work that used to happen with a team of people. So this is one way of looking at it. The other way of looking at it is that using this profound improvement in productivity, this profound capability, you can do things that we were not able to do before. That we can do unprecedented kinds of things. And I have also given examples of this. And in particular, I'll repeat one that I have spoken about recently. This comes from my company, Vianai's work. One of our customers in the Middle East is a distributor of home goods, from FMCG companies. And one very large global FMCG giant recently decided to shut down operations in a country where this customer of mine operates. And they operate in several countries, but this is one of those countries. And what happened was that the shutdown of the factories means that all those goods have to now be imported. And so that changes the entire cost structure and so on. And so what they did was they used our product. We have a product called Hila, which not only lets you have conversation with transactional data, and we guarantee correctness of the results and no hallucinations and all that, but you can then start to ask composite questions, which can layer 7, 8, 10 questions underneath those. So you can start asking questions like, hey, if the cost of this went up that much, and if the cost of that went up so much, what would that do to the profitability? Or find me 10 areas of how to reduce costs, so things like that, which then break down into large chains of reasoning and then give you a composite report, which would have otherwise taken a team of people weeks to do.
Right.
So this customer of mine, Neeraj, was able to, in 2 or 3 days of analysis, they ran a whole bunch of scenarios. And I asked him, he was presenting to one of our events where a bunch of prospective customers were present. And he said that we decided to exit that country. And I was shocked by that because I didn't know that until he actually presented it live in front of our customers. So I asked him later, when did you decide to do that? He said, after 3-4 days of analysis, we realized that there is no way this can be profitable, and therefore we just exited the country. So I asked him, how long would it have taken you to do this otherwise? And he said, probably a year. Because, you look at the quarter, at the end of the quarter, and then you say, oh, what is happening in this country? Let us put some corrective measures in place. Then you do another quarter, and again, nothing happened. And so by the time you have realized that, guys, this is not going to work, we are getting out of this country, a whole year has gone by. Instead, you do this analysis in 3 days. So my point is that we can do these new kinds of things that were simply impossible to do before. And I feel excited about that, instead of looking backwards on things that we used to do.
Most certainly. And maybe which is why you said that don't panic about job losses because AI will create applications and roles we can't yet imagine. But I would like to maybe try and understand this from two perspectives, Dr. Sikka. One is the impact on I can't call them legacy IT companies, but IT companies that have been there for a while, one of which you headed for a brief period. And then the people who work on those companies. Now, the question is, sir, that if an average IT service firm has X quantum of revenue over the last 5 years as an average, do you reckon AI and tools developed by Anthropic, by some of the other LLMs, can it append the business model that the revenue will go off and collapse? Or do you reckon these companies can figure out ways wherein with lower employees, they can still grow higher?
Neeraj, my perspective on this, it's guided by one of my teachers, Alan Kay, who says that the best way to predict the future is to invent it. So I don't believe that these things just happen to us and, what can we say? This wave came and it took us and we got affected by it. I think it depends on us. And I'll give you an example. You and I are talking on television right now. And I'm talking from my laptop, having a live conversation with you across 7 continents, across 7 seas. And this was impossible 30, 40 years ago when I was a teenager, when television first came. The routine that we used to have was that the newsreader, some famous person who were celebrities, would literally read from a piece of paper like this,
Sure.
What is the point of a television when you have to read something from a piece of paper? I can just as well take radio and put a picture of the person of Neeraj on it and say, hey, now I'm listening to Neeraj talk. But by the time television could do the kinds of things that we are doing now, or MTV or live telecasts of cricket matches, it took a while for us to understand the power of the medium. And so it is very natural when a new medium comes that we look backwards and say, oh my goodness, what is this going to do to the farmers? What is this going to do to the stenographers? And the farmers, the manual farming is gone, the stenography is gone. And so first of all, this is natural. What is different this time, I think you can argue, is the speed at which all this is happening. Just compared to last year, we are in a situation where things are very different. Which means that I was talking to the Prime Minister about it some time ago, and he mentioned the stenographer example, by the way. He said, we used to have armies of stenographers sitting inside offices. Now they are not there. So all these jobs routinely disappear. Agriculture has had perhaps the most profound change over the last 100 years. That we used to have 97% of our economy was based on people working in agriculture, and now it is less than, in the US, it is less than 1%, and you still have an obesity problem. And so, the thing about it is that the transition from one category of jobs to another category of jobs happens all the time. One thing declines, the other thing rises. And we, by and large, managed to make that transition quite successfully, partly because we have a bunch of time to do that, to retrain people, to reorganize the workforces, to reorganize the business models and all that. I think the change here is that this is all happening much faster, which means that we need to be much more agile and bold about embracing this. I used to talk about this, 10 years ago, 11 years ago. If you read my shareholder letters and my speeches from that time, they were all about it. And it is here now. And it is happening at a breakneck speed, because these big model companies have money to make. They are in pretty deep holes with large amounts of funding raised. So they are not taking any prisoners. So the long answer, that's a long way to answer your question, which is that, yes, we have faced transitions like this before. Yes, it is happening much faster than before, so the windows are smaller. That means we need to act faster. We need to be bolder, but it can be done because we know that new categories of applications are in front of us, which can deliver tremendous value. So how fast can we abandon the parts of the business that are sinking, and how fast can we jump our workforce onto the new things that are growing is going to define the winners versus the losers. I cannot say to you X percentage of companies will not make it, etc. But I think it's a foregone conclusion that many of them will not make it and many of them will make it. The ones who are able to make this transition are going to have a wonderful future for the next decades to come.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. Ye on the quality lifelong.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff.
Welcome back to India Market Open on NDTV Profit. I'm Hiral Dadia. Very quickly in terms of markets, from the day's highs, we've seen a downtick of nearly 130 points on Nifty 50. We're near the day's lowest levels as we speak. And the pressure coming in mainly from Nifty IT, that's what is down little over 3% as we speak right now. So it's mainly your IT counters which are putting in pressure. Very quickly, your mid cap and the small cap index. Let's see what they are doing in trade because the pressure continues in terms of broader markets as well. Small cap index is down nearly 0.6% and the mid cap around 0.5%, but the cuts mainly coming in terms of IT. We will keep revisiting this, but it's the IPO time. PNGS Reva Diamond Jewelry is coming up with its IPO. The offer is entirely a fresh issue and aims to raise 380 crore rupees, opening today to 26th of February. Before we move on to the management, Mahima joins us with more details. Mahima, what do you have for us?
Right, Hiral. So as you rightly mentioned, it's a completely fresh issue of 380 crores and the IPO opens today and ends on 26th of February. Overall, the price band is set between 367 to 386 and 32 shares is the lot size. Just a brief about what the company does. Basically, it's engaged in the jewelry business, offers different types of jewelry made using diamonds in semi-precious as well as precious stones. And this is studded into precious metals like gold, silver as well as platinum. All the products are offered under the brand name Reva. And of course, the promoters are same as PN Gadgil as well. The company has 34 stores across 25 cities in states of Maharashtra, Gujarat as well as Karnataka and operates in all three formats. That is franchisee owned and company operated, franchisee owned and franchisee operated as well as company owned and company operated. Now, to give viewers a brief about how financials have been, the company's overall revenue has seen a good growth of, from that 200 odd crores in March 23 to around 260 crores and as of September 25 it did around 157 crores. Margins have slightly improved as compared to where they were in 24 in 25, but we'll have to wait and watch for as to how 26 ends for them. But overall profits have also slightly seen a growth from that 52 odd crores to 59 odd crores in the past 2 years. So this is the overall view of how the financials have fared. But in terms of usage of funds, they're planning to set up 15 new stores for which they will utilize around 287 crores and marketing expenses of around 35 crores and the remaining for general corporate purposes. This is the overall view of what the company does and what this IPO stands for.
All right, Mahima, thanks so much for that. Very interesting update. Amit Modak, who is Chief Executive Officer, PNGS Reva Diamond Jewelry, joining us right now. Mr. Modak, thanks so much for taking the time and good morning to you. So take us through this expansion that is being lined up, 15 new stores, but as my colleague pointed out, you have all three formats in terms of franchisee owned and operated as well as the company owned and operated, right? So how is this going to work? What is this expansion about?
Basically, we have got larger number in FOCO where franchisee operate and company owned.
Okay.
Out of our total 33 SIS, 32 SIS are FOCO type of model where franchisee is owning and or operating and company is owning. And one under the same franchisee, it is a FOFO because it is in a mall and in mall under one roof, you cannot have two GST numbers. So it is a FOFO. And COCO is a thing where company sets up its own showroom. The first showroom such set up in the Phoenix Mall, Pune, Millennium Phoenix Mall. And where company will own and company will operate. And the upcoming 15 shops, 15, which we are mentioning in RHP from the capex of around 280 plus crore and marketing of 35 plus crore is all in a COCO type of models. It will be company owned, company operated.
Okay, so then Mr. Modak, the question arises as to where these new stores are going to be added. Is it going to spread your geographical footprint or are you going to go deeper into the markets that you're already present in?
Our promoters are PN Gadgil and Sons Limited, and they have got legacy of 190 plus year, and they are from the basically regional brand, Maharashtra brand, started from Sangli and subsequently to Pune. So we have got good opportunity in Maharashtra also. Many untapped areas are there in the Maharashtra. Along with that, we will concentrate to at first level preference to the north part of the India. In north part of the India, there is a well acceptance for the new brands that what we have observed through our marketing. And so we will prefer that north part of India will be tapped along with the Maharashtra for upcoming 15 location expansion.
Mr. Modak, good morning. This is Hiral on this side. My question is, you're moving in from a shop-in-shop model within PN Gadgil and Sons to the company-owned, company-operated stores, right? How do you plan to maintain that high 23% PAT margins? Because you will face some bit of increased overheads when it comes to independent retail spaces as well. So what happens on that front?
In FOCO model, that is a franchisee operated and company owned, we are paying them commission or the franchisee commission or the payback, whatever you may call it. Same will be saved when it will be a COCO model. and with considering that saving with additional cost, which as you mentioned, that fixed cost will be there because it will be a cocoa from FOCO. So it will be taken care. Yes, I do agree that some 100 200 basis point there will be early period dent may be there in the profit margin, but it will get recovered once those shops get stabilized, because shop required around 3 to 4 years to reach their full level of the operation. If you see last year our operation was having 1.35 kind of the stock turn. Generally diamond industry has got lower stock turn as compared to the plain gold jewelry. But yes, at early stage, little bit dent may be there. I cannot quantify right now, but yes, it will be, but it will get recovered in next coming period once those shops get stabilized.
Okay. You are looking, Mr. Modak, at a shift to studded diamond jewelry, taking the way gold prices have been panning out, right? Now, in this kind of a scenario, what is your plan when it comes to lab-grown diamonds? I know you've mentioned it in the past as well, that you're not looking at lab-grown diamonds, but the consumer acceptance when it comes to lab-grown diamonds is pretty high right now. And when you are looking at affordable jewelry, and you're only looking at natural only as a niche, how do you plan to really get that kind of volumes from here and protect your business and margins on this front?
First of all, when it comes to the natural diamond, it has got some buyback value, and it is appreciating for last 10 to 15 years if you see value wise. So customer who is well informed, he or she generally prefer natural diamond, and we have got 190 years legacy as a brand. So our promoters brand. So people coming or stepping in our shops generally prefer natural diamond. They are not having any liking or attraction for the lab grown diamond, because while buying the gold jewelry also, they are not interested in buying any imitation. They want pure gold. Same way in diamond, they are also interested in the natural diamond jewelry. And that is our experience. And moreover, this lab-grown diamond is a threat for the pointers. That is a higher caratage or the solitaire kind of the diamond. But this kind of the nature is there where we are not much operating in this pointer market. We are mainly operating in design market, or the necklace kind of the things, bracelet or pendant kind of the thing, where designs are getting fabricated or created out of the smaller diamond. And in smaller diamond, that difference in the price is not as much as it is there in the pointers or the solitaire kind of the market.
Mr. Modak, thanks so much for taking the time. Pleasure speaking with you. Wish you all the best for your IPO.
Thank you. Thank you.
All right, we've got Neeraj, and we got you a slice of that conversation while it was happening with Mr. Sikka. But I do want to ask, since you've joined in, Neeraj, before we jump into the next question, maybe 30 seconds to a minute, it's a day when the IT index is cracking another 3.5%.
Yeah.
So what did he say that you can use to contextualize what is happening right now?
Less than 30 seconds, Alex. One, he said that for a lot of companies, I mean, for all companies, it will be bottom up. Some companies who will adapt, leaving away the legacy and going into the future, will probably survive, thrive, and do more. Right? Something that Nitin Rakesh said, that in some cases valuations could expand actually if companies do it well. And for engineers and tech talent, he was very clear, you have no choice but to learn AI. As long as you learn AI and learn it to improve, I think.
So reskilling becomes the key, and that's the reason why a lot of people are saying that potentially if people reskill, there will be no job losses to an extent.
And productivity improves. I wonder what Ashish Gupta, who's CIO of Axis Mutual Fund, has to say about that, and whether or not he sees disruption in his own industry, or changes at least in the way that fund management is done based on the various measures that are being taken on artificial intelligence of late. Ashish, thanks so much for taking the time, and good morning to you. First, on the IT space, a lot of people are wondering whether the calls were right. Of course, the calls were right. Those that were underweight before this entire wave hit. But heading forward, what do you think is going to emerge once the dust settles?
I think as you and Neeraj were also talking, I think what we have to watch out for is who are going to be the new winners. right? And I think we are very clear that if you look at enterprise spend on technology, on IT, that will increase significantly over the years, right? So every company, every business will have to adapt, and it will need to spend more and more on technology and IT. The question is that who will benefit from this spend, right? And clearly, with all the IT tools that are coming in, all the AI tools that are coming in, the per unit cost of providing the IT service is coming down, right? But with the tectonic shift that is happening in the technology, the aggregate spend by enterprise will have to go up. Now, historically, we have had track records of companies to use and say that who's going to be beneficial in which domain. Some companies are stronger, for example, in BFSI, some are stronger in telecom, and that's been used for by us to kind of project how the revenue growth for each of the companies will be. But I think now we are going to be in uncharted territory, really to see which company will have products which will have capabilities to use these tools more efficiently. And the other important thing is that the beneficiaries may not be really dependent on the size, right? So it is not necessarily that those who have large workforces will get larger share of the revenue pie. So I think that's the challenge, that even as the enterprise spend will go up, who are the guys who will benefit from this spend might be very different from what has been in the last decade or so.
Ashish, but the tendency now, and this is not just in India, but it's globally, and you saw that in the US markets overnight as well, the tendency now is to sell and think about implications later. I don't care right now about whether this company is going to emerge stronger or not, I will sell. And so the question to you therefore is this providing you with opportunities to buy into some of these high quality names, because the valuations start then looking compelling after a certain point?
Sure. So I think we are still to reach that point in the valuation. I think the starting point of valuations for many companies was not really very attractive for the kind of growth they were delivering. And I must say that in the near term, we are actually not seeing a major risk in terms of earnings and revenues. In fact, the quarter just went by, most of the companies kind of delivered revenue growth at the upper end of their guidance. And if I look at trends such as services exports out of India, last 2 months continue to be very strong. So the question is not really in terms of near-term earnings impact, but what is the terminal value you assign to these businesses, and that's where the uncertainty is. And given the cloud on that, I think we are not in a zone where valuations are compelling, given the risk of disruption.
Ashish, does 2026 therefore become a year, as things stand, of very bottom-up ideas? Because even within themes, there could be companies which could do well and companies could not, right? So does it become a very, very bottom-up market, or can the macro and the growth and the higher tide take all boats along with it?
So, of course, I don't think it will be a year where all boats go up. I don't think it's going to be a one-way market. We are seeing even on the macro, certain pockets showing very strong pickup, right? So, for example, if you see auto sector, even after the GST benefits of the first 2 months, continue to deliver well. But there's some differentiation coming, that incrementally month on month, passenger vehicle sales the growth is moderated a bit, but two-wheeler sales continue to be very strong. We are seeing pickup in commercial vehicle sales as well. We are seeing stronger growth, for example, in the cement sector. So cement volumes are going at 10%, but steel volumes are moderating. So it's not that we are seeing every business kind of thriving in this macro. If you see retailing companies, they continue to show moderation and growth. So it's not an across the board macro pickup that we are seeing. But there are certainly themes that will continue to work, in my view. Right. So I think power is a theme that will continue to work, at least in terms of pockets, whether it is people who benefit from increasing power demand or certain segments that benefit from increased power capex, like the transmission companies. So I think there will be themes that will work, and the bottom up will work as always.
Ashish, then my question to you is, which is the dark horse sector that you're looking at? Because initially you've been talking about real estate as one, but I think that pressure continues on real estate. I'm not sure if it will be out of the woods. Would you change your opinion?
Yeah, so I think after the 26% drop last year in the real estate index, we have seen last 2 months also the sector suffer. I think the other headwind for the sector now is that if there is concern on the IT sector, the second order impact can be construed on sectors like real estate, right? So I think till market become confident about the IT sector growth, at least for the medium term, there will be pressure on the real estate side. I think one sector we expect to recover, and that has had some issues in the last 6 months, is the hospital sector. I think there were issues around pricing and friction with the insurance companies. There was some slowdown in revenue growth in the last couple of quarters. And I think that we expect should start recovering. The valuations of many of the hospital names have become a lot more attractive compared to the kind of multiples they were trading in the last couple of years.
Very quickly, apart from this, Ashish, a quick view when it comes to BFSI as a space, because IT is under pressure. How are you looking at it?
Yes. So the view there is favorable. Of course, tactically, BFSI and IT are really two big sectors, and clearly with one sector in pressure, there is money flow that moves to the other. But fundamentally as well, we have seen strong pickup in credit growth in the last 6 months. Now we are running at almost 13-14% kind of number, something that looked unlikely just 6 months ago. You are seeing credit costs also likely to come down this year. Many NBFCs and mid-sized banks had higher credit costs last year. So I think the earnings momentum in BFSI, particularly the lending companies, will be strong, should be around 16-17% this year.
Got it. Ashish, where is it that you believe the winners of the last couple of years might still hold forward? You know, usually they say a new cycle ushers in newer winners, but could there be a case wherein the winners of 2025, whatever few they may have been, could still continue to lead?
So I think the sector we discussed just now, BFSI, was one of the big winners last year. I think that should continue. I think auto sector as well. I think it was a strong performer last year as well, and I think we should see positive momentum there as well. Of course, some of the names in the auto sector might change. As I said, we are seeing kind of the segments in which growth is accelerating is changing. But I think autos and BFSI would be two sectors that.
Ashish, you've written some landmark reports. I wonder if on the buy side you do that, and if we get access to that, would love to see that. And we'll anyways see you on Friday at the Access Media Dinner. But thank you so much for speaking to us today.
Thank you.
Bye. Well, on the note that the IT index is the one which is
bearing the brunt.
We call it a day on this leg of India market open, but Ask Profit takes it forward. Maybe there could be some IT queries, so keep those coming. We'll get our guests to give you the best possible answers on those. But from Hiral, Alex and me, thank you so much for watching.
We respect our loved ones lifelong too, don't we? Just like Tata Power Solar Roof, best quality solutions, lifelong service guarantee and unmatched expertise. ये on तो quality lifelong.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp. Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
the latest trends. It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive.
I'm Siddharth Sharma and I am your automate.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner we dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand.
And welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachal and with me is Puneet Zaveri. I think more than a good morning, I think IT has stolen the show today and yet again and created a bad morning for all of us. I mean, for some time I was happy yesterday seeing the FI numbers, coming in the buying side, but then again we're seeing full sell-off in IT as we speak.
We saw some cues yesterday, right? And I think you alerted the system at 3 a.m. for some reason.
The ADRs being down significantly, both Wipro as well as Infosys ADRs seeing a downtick of around 5% each. But Nifty 50 is down around 0.9% almost as we speak, and that is on account of selling that we're seeing on Nifty IT. Almost over 200 points is what we're seeing, downtick in terms of where the Nifty 50 stands. The Bank Nifty, however, slightly, in fact, it's not in the green. Let's try to pull that up. The Bank Nifty and see what levels it is trading at right now. Slightly in the green. I mean, it's almost flat, but in that 61,200 odd levels. With regards to where the Nifty 50 heat map is concerned and where the counters are concerned, you have all your IT names in the red. HCL Tech, Infosys, Tech Mahindra, as well as Wipro, TCS, all seeing downtick in that range of 2 to 4 odd %. Something like an Eternal also is under pressure today, down by about 3.76%. Bharti Airtel down 3% as well after the announcement of putting around 20,000 crores in the next few years in their NBFC arm. But you have something like a BEL and Trent also in the red, down by about 1% each. But on the flip side, something that's probably, in fact, there is no such counter keeping the Nifty in check, but something like a Nestle, slightly up by about 0.6 odd %, Hindalco, JSW Steel as well as Power Grid, some counters slightly in the green on the Nifty 50. Let's try to pull up the sectoral heat map and like we discussed, Nifty IT